Hey, so in this video, we're going to talk about reverse mortgages. The very first thing I need to tell you is I am not a reverse mortgage expert, not even close. So why am I doing a video on this? I actually think this may be some of the best reverse mortgage advice you get because I don't sell them. I don't do reverse mortgages. I have access to them through various channels, as a mortgage broker. But I don't do them, but I refer them from time to time. I get asked by people all the time, should I do a reverse mortgage? A reverse mortgage is a scam, etc. And can you do a reverse mortgage? And I have dabbled, actually done one in my career, and it was many, many years ago. And I think it worked out okay for them, but that's kind of beside the point. I've only done one. I don't do them now. I find somebody that I can refer them to, and I can't get compensated for that. It's not allowed. It's not legal for me to get compensated for that. So I can't in any way, shape, or form financially benefit from referring you out. I just get the question enough that I thought, okay, I have some useful information to share. I'm going to share it. And so first thing I'm going to tell you is do get an expert, not just a number puncher, a data collector. Mortgages are extremely complex. And I don't mean complex like quantum physics. I mean complex like your health insurance bill, because there's way too much government involved in it. And so they're complex in that way. There aren't straight lines between anything. And so many professionals like me, when I did my one mortgage, basically I'm just putting data into the computer and it spits out and says, okay, here's how much money you can have, here's what the interest rate would be, et cetera, et cetera. But I don't know how numbers are calculated. And many do professionals that offer that product to you, that reverse mortgage product to you, are that same way. They can refer it off to somebody who will do all the math for them. They'll dump the numbers into the computer, but they can't really explain to you why this loan amount, why a fixed versus a variable. How did you come up with that fee? They can tell you, oh, that's just what the system generates. So if you start getting those kind of answers, find a mortgage professional who understands kind of the guts of it, how it actually works, and you'll know. You ask your basic questions, and you'll know when you have a good professional. So one of the perceptions about reverse mortgages is that they're very high cost, and so the first thing I would say is kind of high relative to what? The high cost relative to what? Now, relative to a traditional, what they call a forward mortgage, we would think of it as a traditional mortgage. The technical term, when you start talking about reverse mortgages, they call them forward mortgages. That's just your regular mortgage. Relative to those, absolutely. And we'll go into a little bit of detail on that in just a little bit, because they are, significantly higher than that typically. But relative to moving into assisted living, selling your house, moving, that kind of thing, maybe not. And that kind of brings us to the question of value. And that's kind of where I really have a hard time answering the question for people when they say, is reverse mortgage a good idea? Sometimes people will be asking for their parents or the parents themselves, the person themselves will be asking, is that a mortgage, is that reverse mortgage a good idea? And the difficulty with it is, how do you put a price on the value of staying in your home? How do you put a price on that? It's very difficult to put a price on that. So for some people, staying in their home is so very important. So, and for the family, it's important. So it's very difficult to give an answer that kind of one size fits all, to say, oh no, reverse mortgages are bad. They're not a scam. That doesn't mean there can't be unscrupulous professionals hawking them and taking advantage of people. Even wealth professionals, wealth management professionals can do that, because reverse mortgages are a way to tap into that home equity and turn it into investments, right? And so, but the fact that there are those people doesn't mean that the product itself is a scam. That I think it serves a place in the market. But just because you can't put a price on something doesn't mean you can't know the cost of that thing. And that's really kind of where I think that's usually where my answer goes, is I want to educate you to kind of give you a general understanding of, here are the costs. And I'm not talking about your specific situation. I'm going to sit down and quote that because I can't. I don't have the resources. I don't have the computer to put the data in, spit it all out. I don't have it, but I can give you some kind of real generalities that help understand, okay, what is the cost of a reverse mortgage, so that you can evaluate that, whether or not that cost is something that then corresponds to your idea of value, or at least so you know, okay, this I'm really committed to staying in my home, and this is the only way I can see to do it right now. Do I borrow from family? What are the options that I have in order to stay in my home? Now, briefly, kind of one of the alternatives that you might have to a reverse mortgage is just a large home equity line of credit. That's going to be a lot cheaper typically. If you have a large home equity line of credit that you can just draw from over time, and the idea would be to get that in place before you lose the ability to qualify for that, right? So in your higher income, earning years, home equity lines of credit, typically, it's fairly easy to get one that can stay open for 15 years. It's gonna, it'll actually stay open for 25. You can draw on it for, actually I think it's a 10-year draw, 15-year repay. So you have a period of draw of 10 years. So, before you retire, before you go into those lower income earning years, you can qualify for a home equity line of credit. And then just park it. It doesn't cost you anything just to sit there. And then you can draw on that like you would on a reverse mortgage, right? The reverse mortgage just kind of pays out over time, pays your mortgage payment, or adds the interest that is accrued on the debt that you owe to that reverse mortgage lender to the balance over time. A HELOC wouldn't operate much differently once you got it. It's much cheaper to get. So if you can do that ahead of time, if there's enough equity in your property, if you can get a large enough home equity line of credit approved ahead of time to give you a runway of 2-3 years, and people can do that, then maybe that's a better route to go. That's a little bit of an aside. But once you know the cost of, once you understand kind of how the costs work, then you can make that decision. Does that correspond to value? And so let's just take a quick comparison of a reverse mortgage versus a forward mortgage. If you were to have, and I'm going to use an example of someone who owns a house that's worth $900,000, and they have a $350,000 mortgage on it, and they want to stay in their home, and it's getting hard to make that mortgage payment and live the life that they want to live, and do all that on the income that they've got now in their retirement. And so they're thinking, okay, do I get a reverse mortgage? So let me just compare. If you were to just do a refinance of that $350,000 mortgage, now that's not going to solve the reverse problem. I'm just using that as a comparison for cost purposes, right? If you were to refinance that, typically, and then this can vary a little bit, but maybe you pay $4,000 for fees in order to do that $350,000 traditional or forward mortgage refinance. Now on the $350,000 reverse mortgage, where you're going to get a reverse mortgage, it's also a type of refinance, right? You're paying off your existing mortgage and you're replacing it with a new reverse mortgage. The cost of that's going to be closer to $30,000. Okay, so as you can see, that's a very large sum of money. It's a significant difference. But again, you're talking about $25,000. If we're talking about, hey, I'm doing a refinance, if someone said you're going to pay $25,000, you'd say you're crazy. Where are you going for that? Why are you doing that? But if you said, I've got my $900,000 home, and I just want to stay in here, and I want to be comfortable, and I don't want to have to be house poor month to month to month, and I'm going to pay $25,000, the difference between these two types of financing, in order to have that ability to do that for the next several years. Well, in that light, maybe that's not a big deal. But again, knowing the cost is what is going to enable you to make an informed decision about that. And why the cost that high? I mean, people, a reverse mortgage, first of all, there's a mortgage insurance premium that they charge, and it's based upon the value of your house up to the FHA loan limits that are in place that given year. So right now, the loan limits are like $1,089,000. So if my $900,000, that's lower than the limit. So if my house was worth 1.5, they would only use 1.8089. But on my $900,000 house, they charge 2 points, not on my $350,000 loan amount, but on my value of my home. So that's $18,000 right off the bat. And then there's a loan origination fee of $6,000 that gets added on top of that, irrespective of your loan amount. So you could have a $50,000 loan amount, $150,000, a $350,000, a $500,000. They're going to charge you that $6,000 fee. And then there's other costs, and those other costs are where you're going to be similar to your forward mortgage, your title, escrow, credit, etc. Those sorts of things will be comparable, another $4,000 to $5,000. So you've got your $30,000 over on the reverse mortgage side, you've got your $5,000 on the forward mortgage side. And so then just kind of be aware you can have fixed rate and a fixed rate reverse mortgage or a variable rate. And those variable rates may, the rates may vary monthly, may readjust monthly based upon different indices that they're tracking that will determine what your interest rate is. That could be monthly. Those are more risky than those that, let's say, vary annually. Once a year, they're going to review that. But that will change how much they're adding to the principal balance every year to be paid off by the eventual sale of your home. And so it matters whether it's fixed or variable and what the rates are. And then there's a lot of nuance in terms of, can you tap into the equity? And I'm not going to get into that here. I'm not the expert, and that's not the point of this video. But just know that the mortgage professionals who are providing you with the product, their compensation might vary depending on whether you get a fixed or a variable. And so it's fine to ask them, will your compensation vary? To help you kind of evaluate how potentially biased. Doesn't mean a person is biased just because that variability exists, but just to know that, hey, I'd like to know in my evaluation, are you going to be compensated differently if I get a fixed rate, if I get a variable rate, if I get a one month-to-month variable rate, if I get a 1 year annually variable rate. It's okay to ask those questions. Also shop around for these. There's a lot less competition. A lot fewer of us mortgage professionals offer reverse mortgages. And again, it's just the complexity of it. It's a very specialized product. And so because there's a lot few of us that do that, there's a lot more variability in your pricing if you go to one versus another. When you're shopping for a forward mortgage, there's so many of us and the information is so readily available. We have to be a lot tighter in our pricing because the competition is such that it drives that way. It drives us to be a lot closer to one another in pricing. Whereas that's not so much the case with regard to reverse mortgages. So do shop around for that. And again, get a professional who understands the numbers, who can actually tell you without saying, oh, the computer just prints it out. I just put the numbers in and it'll tell me. Doesn't mean they should be able to give you all the details on the spot because of that complexity. It does, they probably are going to need those computers to help them, but they should be able to generally advise you, okay, why is it this, why is it that, and give really good answers to those things, solid answers, not sort of, well, it could be, that kind of a thing. And then financial advisors, same thing. If you got a financial advisor that's advising you to get a reverse mortgage because then you're going to tap into that equity and investment, that, I know lots of financial advisors who do that, and there's many great ones, no doubt, who do it from good motives. But just understand that that's a motivation then that is introduced into it, that it's to their advantage to have you go a certain route. For example, that would push you toward a variable rate mortgage because you can't take money out on a fixed rate mortgage typically. So just be aware of those potential biases of the people. Shop for a good professional. And don't buy the hype on either side. Don't buy the hype that this is a scam. It is essentially a scam. I don't think it is. I for one, my very first thought or impulse is going to be when someone comes to me and they want a reverse mortgage is to evaluate, are there other ways to achieve what you want to achieve? Because this is probably going to be the more expensive way. Are there other ways? But it's not a scam. It's a product that exists, and it helps some people stay in their homes for a very long time, and that's a wonderful thing for a lot of people. It's priceless. It truly is priceless. And so it's not a scam. Don't buy that. But also don't buy the hype that it's kind of the panacea that that's magically going to turn the equity in your home into this massive investment or cash cow. It could help in many meaningful and substantive ways with just living out the rest of your days, or even in your investment strategies. But it's just something that needs to be undertaken with good professionals that you trust who know what they're doing. So that's it. Thanks so much.